All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Wednesday, March 22nd, 2023. Happy Fed Day. Today is the FOMC rate decision day. Included today is the press conference with Fed Chair Jerome Powell. The meeting or the actual announcement will be at 2 p.m. and the actual press conference will be at 2:30. So just keep that in mind. With that being said, I don't expect a lot of movement ahead of the number. The only thing I would expect if we got movement is to get to 4060 on ES, which is the S&P 500. Let's go ahead and chart that rather quickly so we at least have an idea of what to expect. If we were to go higher, again, it's only 25 points away. Again, that's the resistance point we had on Monday into Tuesday a couple of weeks ago. So again, a big resistance level that we're watching on S&P 500 futures. If we were to go higher, that's where we're going to go. Again, and if we break above that, that's one thing. If it does, then you're going to go to 4,100. I highly doubt that would happen ahead of the Fed. So if you have any options open today, more likely just be premium burn, depending on which side of the fence you are in, whether it's puts or calls. Because it seems like a holding pattern right now. We're right above that channel, kind of looked like a bear flag, but we broke out of it. We got above the 50-day moving average on the daily. We're above the 20-day. So again, kind of setting up for, another run to the upside. But again, it is a Fed day. We don't know what to expect. We know what's probable. Looks like 90% it was priced in today for a 25 basis point raise, with the remainder amount about like 5% or so, maybe 10%, if that, being a pause. So Nomura made a call for cuts. I don't know if that happens. Goldman is saying they're going to hold, and Morgan Stanley is saying they're going to raise. So everyone definitely has their own opinion on what's going to happen. I personally think they'll do a 25. If that does happen, I think the market will kind of cheer that, showing that don't rock the boat, but be vigilant. And I think the market will actually appreciate that, even though it's still a little more restrictive policy in terms of increasing the interest rate, because inflation is still relatively high. They have not hit their target. So right now we're between two things. Do we protect the financial system from potential future bank runs if that were to happen? Did they already do enough? The discount window, the unlimited deposits, if they actually go that route. And the other backstops that we have, which is the liquidity offering for the banks, discount window, all that good stuff, and backstopping. Would that be enough to calm markets to continue the rate path of 25 basis points, which the idea was supposed to be 50, but 25 basis points, and then kind of fight both sides, meaning protect the system while still trying to defeat inflation? Very hard to balance. It could go either way, guys. I think 25, just because they want to protect any credibility they have left, and that's where we are. So Jay Powell will speak today at 2:30 p.m. So it should be a fun one. So regards to everything I'm going to talk about, at least when we go around the horn, guys, understand that we may not even get much until then. So this is probably the day that you're really just kind of setting up charts, you're putting up your alerts, and you're just watching and observing. So you're really just doing that. Trading is waiting, guys. I know sometimes it's not fun, and it is work, so it's not easy. Dow futures are up 30 points. S&P futures are green slightly. NASDAQ down about 7.5 points, down 0.06. Russell down about 0.08. Again, not much. Oil 70.17 a barrel. Gasoline futures $2.56, up nearly 1%. 10-year Treasury yields 3.636 currently. Mortgage applications did come in. Mortgage applications tumbled by the most in 4 months because of SVB. So again, still restrictive, as we could tell. Mortgage applications this past week were up 3% versus the 6.5% prior. And the average 30-year fixed rate mortgage in the U.S. fell by 0.23% last week to 6.48%. So obviously, in a kind of, I don't want to say obviously, but kind of in an interesting way, this kind of bank thing may save the housing market in a really strange way if the Fed decides to be more accommodative and starts cutting. But again, if banks start having more issues, it doesn't matter what the rate is because they're just going to restrict lending. So again, it kind of is the Fed side of, do we provide liquidity? That's inflationary. Do we cut off liquidity? That's recessionary. So really the only way to really kill inflation, guys, at the end of the day, whether soft landing or hard landing, is a recession. That's usually the way to do it. And I don't think the Fed nor the White House or anyone in the government really wants that. So they're kind of treading lightly. They're not going the full Paul Volcker route, which was in the 80s. As we know, economics has been a little more politicized now, more than ever. So knowing the game, knowing the rules, we know what we're looking for. Again, just place an alert at 40.60. Let's say we were to fall today. Here's the level that you're looking for. See this right here? This is your support, at least short term, on the S&P 500 futures. That's 39.75. And again, if we break that, then more than likely this might be just ping-ponging within this channel, and then you can go down to 392, right? And if we get down to 392 and that does break, we officially have a bull flag, then we'll start talking about going to 37.50, possibly 3800. But that's a scenario. We need to get to 39.75 or below. Who knows what happens with Powell today? Who knows what the Fed says? But that's what I'm looking at in terms of the broad market. 40.60 for a break. Maybe that'll probably be resistance. Maybe we could start shorting that if everyone starts loading the boat on calls. We'll see the price action dictate that. 39.75 being my support. Again, if that does break, again, that's a support level that we held about 2 Wednesdays ago. And again, if we break that, then we're going to get down to 392, 38.20, excuse me, possibly even 39.20, possibly 3900. But again, this is all probabilities. We don't know. So again, if I don't know what's going to happen, or I think I know what's going to happen, I'm not going to trade it. Bottom line, it's just no point. Copper futures up 0.86%. That's usually a good sign for the S&P. Euro dollar, we talked about that correlation before in prior videos. 107.80. Dollar again, 132.77. That's up 23 pips. Again, when the yen is going down, the dollar yen, when that's going down, that's usually a good sign for yields. So again, that inverse correlation we talked about as well with bonds, but the correlation is actually with yields and the dollar yen. If the dollar yen goes higher, yields go higher. And again, if yields go down, dollar yen tends to go down. That correlation is still intact. Pound dollar 52 pips, 122.70. Bitcoin still hovering around 28,365. Keep in mind that if Powell does pause, initially you may get to 30 on Bitcoin. Just prepare for that. A pause or something like that. Maybe the 25 may not do it, but I think a pause might. And again, still love Bitcoin, still own it. But again, we're at a place now on Bitcoin that we're just on the cusp of where you start getting people interested in it again. And again, I'm talking to you, the individual, as an investor into Bitcoin or a trader. At the end of the day, what brings up the value of your asset? The more demand, right? So what we want from Bitcoin, when we look at price action, when we look at charts, is really demand. We want people to buy more Bitcoin, right? That's kind of the deal. So our Bitcoin can go higher, right? So how do you do that? Well, round number theory is one way to talk about it. You know, if you notice that when Bitcoin first broke 5,000, remember that day when it first broke 10, 20, and it started going up in those round numbers? For some reason, psychologically, it's very satisfying to have that round number, right? 10 best dressed, the top 10, hell, the 10 commandments, right? All that, the basis of 10, the Dewey Decimal System. So always look at that when it comes to certain assets, like a crypto where it's very broad based, it's not just institutionally owned, that those kind of big hurdles either tend to be very big parts of resistance or very big parts of support. So again, what would be a huge support for Bitcoin? 25,000 possibly. What would be a big resistance for Bitcoin? 30,000. So again, that's kind of that round number theory. So when you start seeing those kind of round numbers break 30,000, 35,000, 40,000, you better believe that you'll start getting a little more juice to that, a little higher. For example, if Ethereum broke 2,000 today, I'm saying it could, but if it did, expect that to go even higher because of the number itself, 2,000 being, a round number theory. Just something that I've noticed when it comes to asset prices, that we like those big round numbers, $1 million, 100, 10, 1,000. We like those numbers. It just works psychologically. Will you be swinging options into Powell's speech? We're not sure yet. It's a very good question. I think we go higher personally. But again, at the end of the day, it's all about risk management for the team. So I don't want to send any signals out to our members, looking out for them, obviously. If I were to take a flyer on something, NASDAQ futures is showing a cup and handle. And I sent this yesterday on Instagram. Pretty much textbook cup and handle. Got the pop, you got the whole cup here, and you got the handle. You should be at least getting to the top end of this range here around 13,705. If we were to chart that on Qs, all things being equal, again, here's your cup, here's your handle, you would get to around 333. That's not going to happen overnight, mind you, but that's about a $23 move on Qs. Imagine that what that does with the other tech stocks that have a lot more to go, guys. Again, if we got to 330, that's really what? That's really the August levels. So again, we have a lot of ground to make up. So this is an opportunity for tech, in my opinion, especially if you have a dovish Fed. If they pause, for example, then I'd expect risk assets like a Bitcoin, a QQQ, semiconductors, tech to continue to go higher and get us to that 333 target or 335 target on Qs. What do you expect from dollar if interest rates go up? Since the market is already pricing in 25 basis points, I don't expect much of a reaction. At worst, you'd get to around 105 to the upside, but I still see a continuation down. We broke below the 50-day, we broke below the 20-day, we rejected the 100-day. So the dollar, like I've been saying, is still under pressure. I still think we get to around below 100 by end of the first half of the year. And that's pretty much, in my opinion, based on the backdrop, seems like it's inevitable at this point. And it may even go a little lower to right around 98, possibly to 96. We don't want the dollar to tank either. That's not a good sign either. But again, that would be an alleviation to tech names and obviously commodities. And as we know, commodities are very sensitive to the dollar, gold, copper. And again, when copper prices start to go higher, that's usually a good sign for economic expansion, especially globally for construction and electronics. Do you ever watch the European close? I don't watch the European close specifically unless there's a European news event. The UK reported their CPI was higher than expected, so they're expected to raise rates as well. So keep in mind, guys, the European Central Bank just raised rates as well. I think that was slightly after the collapse of SVB. Now, SVB is not a big deal to the European Union. Even the Swiss are not in the European Union. So if they already contained that bank issue with just those individual banks, fine, then no problem. I think the music won't stop. But again, if they're already kind of setting up the backstops and setting up the liquidity windows, the discount windows, then you already know, wink, wink, we're fighting inflation, but we're going to try to put a bandage on everything and make sure everything doesn't blow up. But in terms of the European close, not exactly. I'm not really focused on that, especially when trading American options. If you're trading Forex, yeah, definitely the European Open or the London Open is probably the key time when you're trading Forex, if that's your thing. But here with options, it's good old 9:30 to 4. We'll go and leave it there, guys. Have a great rest of your morning. I will catch you guys later today for our live. I'll do the live today at 6 p.m. I figured it was best to do it today. After Powell, we'll go over exactly what he said or what he talked about. What do we think about the price action moving forward? And we'll answer some of your questions. Should be fun. Have a great rest of your day, guys. I'll catch you guys later. Cheers.